thing my colleagues told me is to please don't kick the black cable, otherwise we might get off. This is here in the middle, but I think we're in good shape, so it's all fine. And I hope you have fun. I'm really happy to welcome Dominique and Manu here. Thank you so much for joining us. And we also have startups here. But maybe if you can go around so we know who's in the audience, this maybe is also helpful for the networking. Can we go around and can you please say your name and the organization you work in? So maybe let's start here.
Hi guys, I'm Rico. I work with Swisscom Ventures and I'm a market development manager.
So I'm Credit Suisse.
Hi, Anders Christensen, Alliance Block, the new kid on the block.
Dominique Mégret, Swisscom Ventures.
Manuela, Disch, also from Swisscom in the fintech area.
Thomas Kopp, Risk Group, I'm the CEO. It's Insurtech based in Zürich.
My name is Anna Disch and I work in PropTech.
Jan Meyers, Pro Ventures, we do mostly fintech and health tech.
Hugo van Beloen, Producers, we're a software company for smart meters.
Tobias Bergin, Accolis, Business Development.
Alexander Schäfer, Swisscom Ventures, I invest a lot in robotics and enterprise SaaS.
Natasha Curti, Swisscom Ventures.
My name is Ferdinand Schaaf, I'm also from the Alliance Block.
Solomon, marketing consultant, freelance marketing consultant specializing in startups.
Hi, I'm Joshua, I'm also from Alliance Block.
I'm Sammy, I'm from Swisscom Ventures. I invest in fintech and blockchain startups.
Tim, I'm CEO of Silva, the global forest marketplace. Just started last week.
Congrats.
Martin Leckmann, for a member of the VAN network for Swisscom Ventures.
Fantastic. And then we have Alana.
Hi, I'm Alana, I'm Program Manager for Kickstart Innovation.
And Patricia.
Hi everyone, Patricia, the FinTech Manager for Kickstart.
And you said with Impact Hub helping us with streaming. And thank you so much to everyone coming from those 20 countries. I'm so sorry we're going to do proper intro for you, but I promise we'll engage you still after the session. So without further ado, maybe let me introduce you to Manuela Disch, who is our counterpart at Kickstart, and she's the Senior Program Manager at Swisscom.
Thank you very much, Katka. So just a few words from my side. I'm Manuela, I work for the Digital Business Unit of Swisscom, where I focus on fintech innovation. I'm also responsible for the Kickstart partnership. Swisscom is founding partner of Kickstart, so we were engaged since the very beginning 6 years ago, and this collaboration resulted in many fruitful collaboration that ended in commercial products or investments or events like the one today. So I'm very happy that this year we were actually able again to do an event in a hybrid form, having people online and on site, which I think is a great step forward looking back to next year. And today we're going to focus on a deep tech nation, Switzerland, so see the potential of Switzerland. And it will be presented by Dominique Mégret, is our head of Swisscom Ventures and also author of the book. And afterwards, if you're interested and want to have even more insights into Deep Tech Nation Switzerland and want to learn more about, you're curious, there are like books that you're very welcome to get a book if you want. We have like German, English, and French. And there's also vouchers with a QR code where you can order a book if there are not enough. And also for everyone participating online, please write an email to Katka or me or Patricia, and we are happy to send you a copy of the book. So yes, so today's agenda will be, we're gonna hear some words of Katka regarding the Kickstart program, and then we will jump into the presentation about Deep Tech Nation and get the insights from there. Then we have time for question and answers, and afterwards we will have also more time to talk to each other during the network session. So with this, Katka, I will give the clicker to you.
Thank you very much, guys. I was asked to say a little bit words of Kickstart. I think many of you know Kickstart, so I'll go through this really quickly so we get to more exciting part. And then I'm happy to connect also in the networking as you wish. And so what is Kickstart is the open innovation platform connecting startups, later stage startups and corporates, but also other organizations and public sector, creating meaningful partnerships in form of of pilots and commercial projects. We really believe that the world needs innovation to thrive, and we are a spin-off of Impact Hub Zürich. We are one of the locations here, but there's also 100 locations around the world, and we collaborate with them really closely. Even we are independent spin-off on our own since now 3 years. If you look at it, here are the topics that we focus on. So we spoke a lot about fintech, but there's also others that we have. So tech and new work, food and retail, health tech, smart city, and focusing a lot also on sustainability. Overall, we made happen over 170 deals, and just last year 48, and cannot wait for announcement in 2 weeks, where we'll have the results for this year. We focus on the market insights, and so with the outreach from around the world this year, we engaged over 70 countries, and really focus on the opportunities, also on investments and the POCs. From our alumni, raised so far 1.5 billion. So really, it's nice to see those numbers raising in the last 6 years for Switzerland also. This is our partners, to just give you example of the public and private sector. As Manu said, we work really closely with Swisscom and with all different corporates and organizations to basically have the vision, working together side by side to collaborate and co-create. And without further ado, let me introduce Dominique. I just have to cheat because his bio is so impressive that I didn't have time to memorize it. Is the head of the Swisscom Ventures, started in 2007. He joined Swisscom in 2002 as head of group strategy unit, and before then he was entrepreneur in the UK, a strategic consultant in the European telecom industry, and country manager for an IT company in Germany. Thank you so much for joining us and giving the presentation, and the floor is yours. Thank you so much.
Thank you so much. So it's a real pleasure to be here. Kickstart is an emotional name for me, because actually 22 years ago to be specific, I started a business called Kickstart Ventures. It's not the same as this Kickstart, but still the same vibe, emotions behind, and objective to develop startups. So today we'll talk about Switzerland, more specifically, deep tech nation, what future for the Swiss model. So the idea is to step back a little bit, look at the past, what has been our entrepreneurial heritage, and build for the future. So what can we do in Switzerland if we have ambition? And I think there are a few corporates listening today, and startups obviously. So what would be the impact of venturing, corporate venturing for Switzerland as a country? And the message is, it's huge. It's extremely important to have a strong involvement of the institutional investors, of the corporates, to build a very strong tech ecosystem. And when I started writing the book about it, I did not even figure out how important it was, and just making research about that, I concluded it's fundamental to have a successful transition from the old industrial area, where Switzerland was clearly very successful, into the new digital world. And you see there are a couple of challenges on the way, so that's what we'll be talking about today. Right? If you give me a couple of minutes about Swisscom Ventures, just to understand where we come from. We started as a startup literally within a large organization, Swisscom. 15 years ago, small team, 3-4 people, mostly focusing on US investments, so Silicon Valley. That's where you get to know actually a very efficient tech ecosystem. We learned a lot from that investment time. However, we realized we have to do more in Switzerland, so we started about 10 years ago focusing on Switzerland, and now we're about 60% investing in Switzerland, 40% internationally, mostly US. We have accelerated our growth 3 years ago with an external fundraising. So until then, we invested about 70 million. About 3.5 years ago, we raised 200 million, and then another 300 million this year, so 600 million under management. We've invested in 75 companies, and as you can see here, the pace of investment is accelerating because we've already finished investing the third fund, which was about 200 million, and we're starting this month investing the fourth generation. Digital transformation is the name of an independent structure based in Luxembourg, which has 17 external institutional investors, primarily pension funds, banks, family offices, mostly from Switzerland, but one from abroad. So you see the idea is that we work with a hybrid model. 25% of the money comes from Swisscom, 75% from third parties. That's how we scaled sixfold in the last 3 years. We have the same mentality as you guys. As a startup, we want to grow, we want to have an impact, and that's why we chose to go for this model. It's quite a unique model because we're still employed within Swisscom. However, we manage external funding as well. From the 75 investment, we've done 34 exits already, about half, 6 unicorns plus a few in the making. Some are listed, Fastly, Sophia, Antenna, and others are not listed, but they reach unicorn status, including Scanit, the Swiss company you know well from Zürich. So, if strange, yes. One slide for the corporates. What is corporate venturing in our vision, Swisscom Ventures? It's more than just financial returns. It's 4 layers of value add for stakeholders. Obviously, the basis and the hygiene factor is about financial returns, and the idea is that objective should be better return on investment than the mother company. That's important because that's how you get long-term sustainability and credibility. But we also have and want and do deliver strategic value for the mother company on top, which is primarily about strategic insights, business development for the line, growth options, M&A options, PR, and HR. And that's basically the objective is to establish corporate venturing as a function, like you have M&A or strategy, and that is 35 years old industry, still in crystallizing what does corporate venturing really means, what's the raison d'etre, but we're working on that, and you see this evolving very nicely. I really believe CVC is now getting a significant impact on all corporates worldwide because it's about external innovation. You know, it used to be all about internal innovation with all R&D departments. Now everything has been externalized. Like at Swisscom, when I joined, there were 300 employees in the R&D. Today, how many? I mean, I couldn't count them on my hands. So basically, no R&D inside Swisscom anymore. Everything is being done outside, and that's why corporates need to have a foot outside as well in the outside ecosystem if they want to keep track with innovation. The third level is about our country, Switzerland. It's about scaling the ecosystem. And that's why I wrote this book, and that's why Swisscom Ventures is engaged in investing in Switzerland, because we want to build and scale the ecosystem to the level where it deserves to be, which is 10 billion. Well, maybe I'll have to do it without slides. No, it's fine. It's a 2 billion ecosystem at the moment, and you'll see today's speech is about scaling it up to 10 billion. That should be the objective, and it's important for you, for startups, to get more funding, because ultimately, if you want to get to category leadership at global stage, you need to have access to liquidity, at least at par with your American or Anglo-Saxon or Chinese competitors. So that's the objective, and it's a common goal to reach the 10 billion investment per year. And last but not least, it's also about having an impact at environmental, societal, and economical level. And that's a great privilege to do a venture investment. I really feel is that on top of making money, we can also have a significant impact just by choosing the right technologies which are meaningful for society. And that's very important. If you think about that, venture capital, it's about $500 billion free money to spend every year in the world. 500 billion discretionary power. And I'm not talking, and typically in the corporates you have a lot of money, but 95% of the investments are already pre-decided. You have to maintain your core business. Here you're talking about $500 billion money to decide whether you put it in, if you want to put 90 billion in taxi apps, like with 28 billion was spent in Uber and Didi, and so 90 billion has spent in that category. Is that really useful to spend money to just compete and win market share with a price discount, or do you want to spend the money elsewhere? That is the responsibility of the investors to decide, and that's a great privilege. And we want to use the money as well, Swisscom Ventures, in a way that has a meaningful impact for society. So that's why we've added 3 categories this year. One is about sustainability investments, second is digital health, and third is blockchain digital assets. Those are 3 new areas of investment for Swisscom Ventures. So let's talk about Switzerland. Let's step back a bit. No, we are the sons and daughters of a long-standing tech heritage. 250 years since Blancpain's first watch manufacturer worldwide. I mean, 250 years of deep tech. You can call it high tech as well, but deep tech means something very deep, very scientific oriented. So basically innovation derived from research. That's what deep tech means. And this is exactly what watch industry has been doing. I mean, you don't find many countries where people are happy to make complications. But here we are. It's all about the little detail of, it's about getting to perfection and one step even beyond that. If you think about the culture, it's the same as haute cuisine in France. They do something very specific, different from the other countries. That's what gives them their leading edge. Same for haute finance in London. The way the bankers act in London is a bit different from the other countries. And high technology is something which some countries get it. They get it in their genes or don't. Switzerland is a very privileged place to do this because we have heritage. And that is not to be understood, to be underestimated how important this is for all scientific-based startups. We have leading universities, as you know, which helps, not just in Zürich, so with a great place to live. I think we're getting some slide issues, maybe. It's okay, then you get 2 slides for the price of 1. And world-class research infrastructure. Thank you so much. Visionary researchers, not to be understood. You see, Mr. Nico, he invented this PC 8 years before the Macintosh. And consequently also invented a new way to deal with a mouse, basically invented Logitech. Logitech was a spin-off from his department. So think about it, Logitech is a 20 billion tech company, all coming from the mind of this guy, and nobody knows him, so we need to honor those people. Other countries, like in America, they honor their visionaries and their tech people. So I want to honor Professor Nico for the same reason. I could find many others. So in the book I try to explain why did we miss the digital opportunity, because Europe has invented at least half of all the key semiconductors and computer systems, but we missed the way to commercialize that and make an industry out of that. We'll talk about that in a moment. Great entrepreneurs, I mean, this is even better than good, it's world class. It's fantastic entrepreneurs in Switzerland. I mean, if you go back to Nestle or Straumann, Daniel Borrell with Logitech, and now with Madeha Diawatsi, those people invented new categories, and they manage out of nowhere, literally a small country, they manage to get out and conquest the world. And so if they did it, why can't you do it? I mean, I see no reason why you wouldn't be able to do it. And we should not think ourselves as being a country of bureaucrats or bankers. The fundamental DNA feature of Switzerland is about entrepreneurship in deep tech. and all the figures are there. I mean, banking is 10% of the country's GDP. Most of the rest comes from other industrial and tech industries. Do you know the concept of hidden champions? I mean, it's coming from the German KMUs, or the mid-size enterprise segment, which is very strong in Germany, but it's the same phenomena in Switzerland. So those are companies you don't really know. They are very humble, very discreet, don't really talk in newspapers. They are family run. They don't take venture capital money, but they are extremely successful, amazingly successful. And I've always underestimated that. A company like Synthes, for example, just doing those orthopedic instruments, or at least products, 20 billion, sold for 20 billion to J&G. And it all came from a small village in Switzerland. Same for Straumann and all the other companies. They are able, I mean, Switzerland has been very good at building world-class companies worth billions out of small villages. Literally with a workshop, somebody doing a nice product and being able to export it worldwide. That should not be understood how important. ABB is the same, you know, it all started very humbly with a couple of guys. Would be very much like two ETH students from engineering department who would create their startup. That's how they started here, actually, a couple of hundred years ago, and now it became ABB. So what's interesting is that you see the heritage from textile and watchmaking industries, which have spun off into different industries, and each time Switzerland was very good at capturing the opportunity instead of defending the old model, which was challenged by competition. The idea was to go quickly to the next level. For example, if you take textile, you need dye, weaving, and power for textile. And that's how, when textile got challenged by Indian, let's say, global competition, it morphed into three industries: chemical, machine tool engineering, electrical engineering, and so you see the Hoffman family, for example, investing in the next generation, and then became Roche, or the Baumann family investing in young, I would say, startup, Walter Boveri, and became ABB, but also himself invested into the electricity industry. So you see, the ability to go to the next innovation is what made Switzerland successful. It's not just because we were good at it 200 years ago. It's just we were good at capturing the next opportunity. And now this is exactly what we need to do, is to make sure we are well positioned to the next wave of innovation. So, you know, if I finish with this, I would say everything is fine, great. We are positioned the country's most innovative country in the world, even with, you know, if you're talking about happiness, also very privileged to be here. So, you know, what else? It looks like everything is perfect. Well, not quite, because if you think of what's happening, there has been a revolution in the tech industry in the last 50 years, and with mind-boggling consequences, and that will challenge the Swiss model. Because the venture capital-backed companies, let's call them the VC kids, they are so powerful that it will ultimately challenge all the foundation of the Swiss wealth, including banking. I mean, you can see a number of digital concepts which can blow away the banking industry, but also pharma, electrical engineering, and so on. I mean, I could not see any safe industry in Switzerland, so we need to reinvent the model. And if we, I mean, in the past we reinvented based on family succession, so a lot of money, so that you could have wealthy families investing and putting a lot of money into their next generation. That model is challenged by venture capital. And let's see what happens. If you doubt about that, the power of this model, you just think about that. In the last 50 years, the top 10 companies have been all but Saudi Aramco and Berkshire Hathaway, all been VC kings, all of a sudden. And they are 5 times bigger than what used to be the top 10 companies 50 years ago. And you're talking about, I mean, who would have known that, you know, companies like General Electric, all the bank and energy companies, so powerful, so much cash, they're all gone now. I mean, not really gone, but you see General Electric and so on, they are no longer so powerful. And they are all new venture capital-backed companies taking over the world. So let me just give you a little bit of history on venture capital. We need to understand what happened, actually. It didn't start 50 years ago. It started 50 years ago, 50. And I would mention Professor Doriot as being the father of venture capital. He was a French professor at Harvard. He created, by the way, INSEAD in the 60s. But he also had a military background. He helped during the Second World War. He became general for the Americans. And he's been asked to create a department to help veterans to relocate to the US and give them a bit of money and just maybe with develop technologies which could be helpful for the army. He declined doing that, but he did it privately using institutional money. And that's how the first venture capital fund was created. And he invested in East Coast startups. The best known startup is Compact. 50,000 check wrote and he got 200 million back. It was a good start. But the East Coast missed the opportunity because it all happened. I mean, the real start of venture capital it was in California because there was a guy called Arthur Rock. He had the good idea to invest in Intel, which is the first real VC-backed company in the West Coast. And that's when it all started, really. If you think about that, the same group of guys, 3 guys from Kleiner Perkins, and Don Valentine, the head of Sequoia, let's say 4, they've invested in fantastic companies, like Genentech. Genentech is the pioneer of biotech, sold for 100 billion to Roche a few years later, like Apple as well. So you see those guys, they've created new categories. And we are talking about a handful of people with about $5 million. So that's how you create Apple, Genentech, and a few others. So that's the start. And all those companies, and the name is history, the rest is history, they started reinvesting themselves through corporate venture a generation later, like Google Ventures. Then 10 years ago, the Chinese started all of a sudden, and they started wide, all with corporates, no money from the States, but they basically let or allowed their top corporates, like like Tencent, SoftBank is another story, to reinvest up to 100% of their cash flows. And that was sufficient to create a huge inflow of capital and to create an industry. So in 10 years, China was, 3 years ago, was even investing more money than the US. Now it's a bit down because the government realized this is getting too powerful, so they are calming down a little bit the investment appetite. And also Donald Trump stopped the Chinese investing in the US. So it's all going down a little bit. But you should not forget, China decided in 10 years to catch up with the US, and they managed to do a big, not all of it, but a lot of it. And Europe should think about that. I'll come back on it. The Japanese with SoftBank have had even the idea to go even wilder. This SoftBank has a long history of venture capital investment, and set 100 billion fund, which was 3 years ago a huge amount of money. I mean, it was 20 times bigger than the largest fund ever. So a new category, and this is a new experiment. But you see the trajectory. It's getting always bigger, always more international. And if you compare it with Europe, Europe had a good start 20 years after the US with companies like Apax. Unfortunately, in the 90s, all those companies had the idea to get bigger, and they all became private equity firms. So it looked like easier money to be made, and unfortunately, all the early starters in Europe basically are now PEs, no longer to venture capital. So you had to restart in about 15, 20 years ago with companies like Index or Lakestar more recently. So the industry in Europe is coming to let's say a 40 billion investment a year level, which is good, but it's still lagging to the US. It's about 6 times less than the US because it started 30 years later, and we did not really put the means behind it. In Switzerland, it started primarily with corporates, with Novartis and Roche investing about 20, 25 years ago. And Actelion was the largest exit in the biotech space. CRISPR is also a 10 billion company, and On, as you know, as well recently. So just as a summary, it's all about building ecosystem, but also dynasties. If you think about Naspers, a small South African publisher, almost had invested 30 million of its money into a small Chinese firm called Tencent. So their 30 million became 120 billion euros. So that is a transformation move for corporate VC. I'm talking to my corporate VC colleagues. If you can do such investments, you do have an impact on your company. And Tencent became itself a massive investor and got 7% of Spotify, 8% of Tesla. And it got so big that, as I said, Donald Trump basically forbade Chinese firms to invest in the US because they realized, the American realized they were about to be controlled by Chinese firms. So you see the power behind that. Same for SoftBank, invested 100 million in Alibaba. It's worth 150 billion, the stake. And Alibaba is now investing huge amount, like in Ant Financial, which is also a 10 billion company. In Switzerland, the first dynasty I could see is Actelion, which spun off Adosia for a couple of billion 6 years ago, and Adosia starts investing in the ecosystem. So that's what I would hope for Switzerland, is that the successful entrepreneurs would reinvest their money in the ecosystem, and that's how you build a very nice family. So why is venture capital so successful? 3 reasons. First, it's all about natural selection. You don't have to have, as an investor, a great idea to know this is exactly, Elon Musk is the guy who will revolutionize the car industry. What you do is typically you do different bets and you over-allocate your follow investments in the winners. And as a natural selection process, you end up having huge amount of money invested in the winners. Like 25 billion has been invested in Tesla. If you think corporate or a state-owned R&D institution, they tend to have only one idea, and they will only invest in this one maybe or this one. So they have potentially, 95% risk that it's not the right company, but they will tend to invest in only one option, and typically the one option which is consensus based. So it's typically not the most disruptive one. That's why I fundamentally believe in the external R&D model, because you have many bets and you don't have to be the smartest on earth, but you have to be monitoring progress and invest on the winners. Second, startups have a special culture. They are pirates, no limits. Even the legal boundaries are somehow to be negotiated, or let's conquest new markets first and then adjust the law afterwards. And you see that in a few companies. And corporates cannot do this, otherwise they would have real issues. And so that's why there is a fundamental difference also in the incentivization side. I mean, startups can earn billions if they are successful. You cannot beat that in a corporate. And last but not least, it's all about growth. It doesn't matter how much losses you are making. And this is not just fake, it happens. But the more revenues you get, the more losses you have, and it's no problem. So the whole financial system has understood this and gives a benefit of doubt to the venture capital-backed companies. If you, they are the one in gray, sorry, in dark. The 3 pure-play electric startups financed by VC venture capital is worth more than all the other mixed motor automotive industries. Even though they are much smaller, they only account for something like 2% of the automotive sales, because just they have a high multiple, because the financial market trust the VC model, trust the growth-focused companies more than they would do the classical companies. Even though they are doing the same, at the end of the day, when Volkswagen puts 20 billion into electric cars, the market does not take it for granted. They want to see the results first before they would give the valuation attached to that. And when Tesla takes 25 billion, invest, let's say, even less money than that per year, they would get a different valuation. Same for retail industry. Amazon is twice larger than the top European and American people, even though they are selling, well, it's the same, but Amazon is valued 6 times revenues, the others 0.5. So, as a consequence, you see what happened is that Europe only has 2% of the market cap in big tech. And that is a fundamental problem, because you're talking about the future here. You're talking about who controls the digital economy, also who controls the tech platforms. And Europe has only invested 1/6 of American money in venture capital, and I believe this is the main reason why we end up with this situation. And it cannot be a matter of intelligence or because research, because Europe has almost half of all the fundamental scientific discoveries. If you look at Nobel Prizes and field medals, and about a quarter of the world GDP and also the world's R&D budget. So you see, we put the same amount of resources than the US in R&D. We have 4 million software developers. The Americans have got 1 million less, 3 million only. So we have the same resources, let's say, but because we do not invest in the later stage rounds, when there are kingmaker rounds, or when we decide who is going to be winning this category, that's where the European and the Swiss in particular as well are not competitive compared to the US, because we have 6 times less venture capital at our disposal. And the results is that the US have got 80% market share of market cap, share of the market cap in big tech. And that has to change, because if you look at the top 25 companies in the world, I'm talking about anything including Tesla, the hardware and software, Europe is nowhere. There is only ASML, which is a semiconductor company based in the Netherlands, and SAP in the top 25, but it's only 2% market cap. Same with the digital, it's even less than 2%. Europe is out of the picture. So that's where we have to react if we want to have a say in the future. And this is linked to the fact that, as I said, we have a fundamental funding gap, whereby you see the largest fundraising in Switzerland for Swiss companies are 500 million Sophia Genetics versus 10 times more for Europe with Delivery Hero. If you say the compound or the total amount of capital raised versus about 27 for the Chinese Alibaba and 28 for Uber. And so you see the ratio. I'm not too worried about the Swiss ratio, because we can be focusing on niches where Switzerland can be world leader, but I'm worried about the European in particular. If you want to compete in the B2C space, you need a lot of money. So I won't go into details, but you see the evidence based on the rounds. You see that while Europe is growing, it's still a big gap with the US, especially in the mega rounds over 100 million. And that's a problem for the digital space, because there the cloudification of software is exacerbating the polarization. I mean, the control, the power is getting even more concentrated now that everything goes on the cloud. And you see that has some issues around technology sovereignty, and the same for the hardware. So I'll pause for a second, because my argument is to say we have an issue in Europe. Switzerland also is confronted with the same issues about technology sovereignty, about lack of ability to compete in the mega rounds. So what should we do? That's where we have to be smart, and that's where the solution is in this room. They are the startups, you are the startups, and the investors. If we play it right together, I'm sure Switzerland can make a very nice story out of that. Because at the moment, we have, for the same as Europe, a fundamental issue by putting 25 billion money in R&D country level, but only 400 million in venture capital. That's what the Swiss investors would pay here, 400 million, but they put 25 billion in R&D. Somehow it doesn't make sense. We do not have the ability to commercialize on R&D products. And when we do it, it's mostly done with foreign investors who account for 80% of the rounds. And if you take in the later stage round, the winners, it's 95% of the money comes from abroad. And we've seen that ourselves. Many times we were not even, we had to fight to get into the top deals. So the model, it doesn't work, because if you are depending on foreign investors, you can't really reinvest the money locally, you can't build the Swiss ecosystem, and so you will always suffer from a scale level. And that's why I'd like to talk about an action plan, which we are launching. We started talking with politicians, and there is some traction. Hopefully some news will come to scale the level to fivefold to 10 billion per year. For that, you need to have institutional money. You need to have matching funds from the government. You need to have a reaction at the highest level, and also corporate need to understand they need to do something for their own future. If we don't do anything, like Swisscom, that's my pitch to Swisscom as well, then you will have to deal with a 2% market share forever, and that will be 1% soon. So nothing to say, and talk about technology sovereignty to your corporate mothers, and that has a big impact on the way people start reacting. Say, oh, can it be? Well, it's all about funding. If you don't put money into the system, don't expect to be able to control it. And that's where I would like to finish with the nature of the opportunity. And that's where we all in this room can play a role. Because ultimately, it's a catch-up game. As I told you, we have strong R&D credentials, but weak investments. We only put 10% of the amount invested into venture capital. So there is a catch-up opportunity, which is great news for investors, because that means you can have low-hanging fruits, less competition, and a track record which is actually a very good one. Everybody should know that. I mean, this number I had to compute myself because nobody talked about it. I've always heard about, we don't have Google, we have a lack of exits in Switzerland. It's not true. I mean, the Swiss ecosystem last 50 years has created massive value. 12 billion invested, total venture capital money invested, but 80 billion value created. I mean, this is a great track record, but people don't know it because the profits have been disaggregated and basically taken by foreign funds scattered around the world, so there is no consolidation of the profits. So you didn't have a venture capital which created billions of money like Sequoia in the States. So you don't see the profits, but the profits were there. It's just that we did not really realize that. And especially if you're able to invest at a low valuation because it's a hidden I mean, it's not very well known, the Swiss market. You can flip into international market valuation over time to do an IPO internationally. So you have a nice scaling opportunity for investors. It's important that you say that to your own investors, because otherwise they will have a bias against Switzerland. You know, oh, too small, not the same exit valuation than US companies. It's wrong. I mean, with Sophia Genetics, for example, where we've been invested for the last 8 years, we started when we invested it was 10 people. Now it's about 500 people, and they're going to 1,000 people. So initially it was local valuation, low, but eventually it was an IPO on Nasdaq, $1 billion exit, and that was a global valuation. So if you can make the flip, it's very attractive, and that all investors should know about that. That's what Switzerland can offer. So, in a conclusion, it's a hidden champion as a market, venture capital. I'm reusing the same terms as for traditionally used for SMEs. I think we can apply that to the venture capital and tech market as well. Not very well known, humble, but very high financial returns. The low public awareness is an issue at the beginning, but can be managed over time if we are self-aware. And eventually you can develop world-class quality product, especially in deep tech areas. So things which comes from scientific research. I would forget the B2C side. I mean, B2C side can happen, but you see what happened with Get Your Guide and WeFox, the two largest B2C companies in Switzerland. They got funding from Berlin, and they also more or less relocated to Berlin, because that's where you could position a B2C company better. So I'm not saying it won't work in Switzerland. I mean, look at On. On was a fantastic success, B2C. But I would say typically the B2B or the deep tech companies have a greater chance. And as a cluster, we should develop a brand for this. If everybody talks about deep tech nation, like we're talking about Startup Nation with Israel, if we talk about that, everybody, it's a self-fulfilling prophecy. Everybody will start saying, oh, Switzerland, that's the place where you get cool products, low valuation, very high quality, and that's how you build a brand, and over time we build an ecosystem. So that's the idea, and I finished by saying you can look for specific areas, call them moonshots. For Switzerland 2030, how do we spend the 50 billion, which I hope we will invest in this country in the next 10 years. There are 10 areas where Switzerland has a strong potential. MedTech, obviously, because of the tradition, but also precision agriculture, also because of food industry behind, and so on. One interesting thing, if you look at history, 1 billion invested gives you 1 unicorn, which is $1 billion company. It's remarkable, this, I repeat, it's an input-output game. If you put 1 billion in an ecosystem, you get 1 unicorn. It's a bit schematic what I'm saying, because it's not so. But if you look at most of the other international clusters, the number of unicorns is directly correlated with the number of billions invested. So if we put 50 billion in this country, statistically, if you believe in the law of natural selection and everything I told before, we'll get 50 unicorns, 50. That should be the objective, and we will get there. My very last slide, I talked a lot about money and financial, but I hope that entrepreneurs and investors also aspire for something even greater than that, which is, and I don't think it's a mutually conflicting thing. I mean, you can do both. It's about addressing high impact, socially high impact topics with new technologies, which do not exist today, but if you invent them and bring to the market, you create, you solve some of the world's largest problems. And venture capital so far has been focusing on 3 out of the 17 Sustainability and Development Goals of the United Nations, you know them well. Partially as well in the clean tech space, there have been some activities, however, pretty low, pretty little money flow into these areas the last 20 years, I hope. Now with the sustainability topic, climate, tech emerging, I believe there is a new wave of investment coming at that level. And for the ones who are really idealistic and long-term thinking, even the bottom ones can be addressed with venture capital. Because you see venture capital now flowing into areas which are even usually used to be done with the state, by the state, like space industry, army, but also why not peace and all those topics can be partly addressed with venture capital. So I leave it to you to find the solutions. And as an investor, I'll be happy to back you. Great ideas. Thank you very much.
Thank you.
Thank you so much, Dominique. I'm not going to climb all around the room, but if you guys have any questions, please, if you can say who you are and ask questions. Anybody? I can start it, huh? Oh, go
Yes,
for it,
please.
Samir. Go for it.
You know, I see a fundamental issue with broken valuations. Our financial system rewards speculation, rewards return on investment when you have free money. That's what certain countries are using. But at the end of the day, the value is produced by the small companies, by the intellectual property generated by the small companies that are not, we mentioned, not rewarded properly. How do you fix that? So Tesla, with the valuation that they have today, it's absolutely unjustified against all the other companies that are also doing quite a lot in the automotive industry. But still, we put the big numbers because you have free money in circulation. It is somehow a systemic problem that you get the rewards for certain things that do not generate that much value.
Over time, I believe the financial market will recognize true value creation, but over time, long term.
When it disappears.
When the bubble disappears.
When the financial market disappears,
So,
in the current form.
That's why now what do we do? Because there is abundant supply of money, as you know, maybe too much, you could say. But so we have to play the game. If we don't play the game because we believe it's unjustified, then you're out of the market. And that's exactly what happened with the European investors typically. They would not play the game, or they would invest, let's say, in US firms, exacerbating that topic without fully taking advantage of it. So I'm a realist, pragmatic, so to say. If money is there, just take it. And but it's your responsibility to invest it in areas which make sense. As I said before, there have been a few categories in the past where VC money flew into, which I personally find it not, I don't want to spend the rest of my life to optimize, let's say, an advertising algorithm with programmatic advertising on a social network. Because that doesn't mean that, for me, this is not really adding value to the world. But it's up to us to put the money on other topics. And therefore, I don't see a problem with the financial model. As long as the money as such is not the issue. The issue is what do you do with it. And
just distorts your valuations, which are incorrect. But again, you have to still continue building your intellectual property.
Absolutely.
You need to continue, investing in education, and don't expect high returns there.
Well, I used the opportunity to have Alexander in this room for
fake high returns.
Because I wanted to thank Kickstart as well. We invested, Alexander invested in a company called Labster, thanks to a Kickstart event in Zürich, actually. And if you ask Alexander, in EdTech, there is money to be made. But I let Alexander comment on that. The issue is EdTech doesn't make money. I mean, a little bit exaggerated. What would you say to that?
No, it's simply not true. EdTech is making a lot of money. I mean, over the last, and Corona has, obviously EdTech is a lot about digitizing education. Corona has just given a huge boost to EdTech, to the industry. You see now, obviously, a number of educational institutions re-evaluating digitization strategy, so we would expect also a bit of a slowdown. But you know, this trend has really started, so I would completely refute that there's no money to be made in edtech. There's clearly is a lot of money to be made. If you look at, you know, globally, education industry is almost as big as the healthcare industry, you know, on GDP level. If you look at, you know, the top 10 edtech companies listed today, and that's mostly in the US, a few in China, they have about 5% of the value of the top 10 healthcare companies listed. So, you know, it's just the education technology and the education industry is just starting essentially now getting recognized and getting value.
Thank you. We have Tim, and we have 3 questions online.
Tim, hi.
Hi.
Katka mentioned. I'm not a VC expert, but I've seen a couple of announcements recently where, for example, Sequoia invested 10 million in Letzing in a relatively early round. My feeling is that the global players are coming to Switzerland. They're coming to Switzerland in earlier stages. Do you see that? I mean, it's competition maybe for you, but do you see it in terms of the Swiss ecosystem, in terms of deep tech Switzerland, deep tech nation Switzerland? Do you see it as a net positive or as a risk or a problem?
It's definitely a positive thing. If Sequoia invests in Switzerland, it's a great recognition, because they are literally the best investors on the planet. And in the great scheme of things, if you want to reach the 50 billion investment, you need foreign investors. So absolutely great. The only thing is that we need to have a balanced way of doing it. So more Swiss investors together with international investors, that's just a solution. I'm not a nationalist in that sense. I think we learn a lot, we get a lot of value from international investors, especially in the later stage rounds. But we need stronger local players as well to be able to bridge from seed to D rounds, and also stay on the boards of those companies in the later stage, because that's when you decide about where do you put the HQ, who is the CEO, and that's where you decide about the future of the company. We should not be underestimated. In the boards, they have power to decide where the company is heading for. And that's why Swiss investors need to stay on board. For that, you need money.
Thanks.
Maybe a couple of questions. One is from Floodlight from US. Thank you so much. The question is, reserving capital for follow-on investment has been critical for many top-tier VCs. How does Swisscom approach high potential investments in terms of timing, enabling future growth?
Do I understand that it's about follow-on investments? Yes. So we typically invest in 5 to 6 rounds historically. The first ticket is 1 to 5 million, but we can put up to 30 million per participation. So you see, that's how we hedge our bets, and we see which companies are doing best, and we over-invest in the ones doing well. That's why, to answer briefly, there is absolutely enough capital for the follow-on rounds. Typically, we invest more in follow-ons than in the early stage, in the first ticket.
There's another one saying that they believe that until there's equity funding for women-led ventures, they will not be solving the diversity in tech. Do you have any comments to that? And are there any initiatives focusing on women leaders and founders to have such a support?
It's true that we have an issue in the VC industry, tech in general, with less than 10% female founders. There is no immediate solution to get to, let's say, 40-50. My objective would be 40%, because that's what the quote you have in scientific areas, number of female students, for example, and researchers in particular. That's where we should aim at. One way to do it is with investment. You need female investors, and so that's why we've got, for example, for our digital health practice, we have 2 female investment director and partner actually, and they are able to also spot the the female founders they want to back. So in a way, it's a people business, and that's how you need to have female investors to really understand how to invest in the best female-based entrepreneurs. It's a generational matter. It won't happen overnight, but we have to start with the investors, and that's what we're doing at Swisscom Ventures.
There's one question, this one is really long, so I'm going to summarize it. It's from basically CE startup focusing on SDG solutions, and to say kind of that they feel that they're not really taken seriously. How can that change, especially maybe to your last slide of kind of the change, and that there's increasing startups on those topics. What would you suggest to them to really be taken care, I would say taken seriously by the investors?
ESG topic, you mean?
Yeah.
I guess yes. Environmental, social governance topics traditionally have not been taken seriously. Correct. Clean tech has been a disaster from a financial returns point of view. However, if you look at Tesla, it's a pure clean tech company, and it's a $700 billion company. So you cannot say you can't make money. It's just that it's a difficult game, but you can make a lot of money. It's only, and I do believe with climate tech, for example, now if you look at how serious this topic is being taken by corporates in particular and institutions, a lot of money flowing into their space. So I'm absolutely convinced VC and startups can be very successful in these new areas. So in a nutshell, I would say, follow your dream. If you are convinced this is the right thing to do, just do it. There are about 20,000 investors on Earth. Or you can always find, you only need one. You need a couple of individuals who share your vision, and if you're persistent, you will get funding. And over time, if it's successful, you get even abundant funding. And you end up, as you were saying, you get too much funding. But this is a process, so you cannot just start initially with abundant capital. You have to make your own way there. So I would say historic level of attention by VCs is by no means the measure of the next 10 years. Things VCs have looked in the past might not be the topic of interest in the future. Because taking about programmatic advertising has been a cluster of interest, but then people move on to other topics. And I think ESG topics can certainly be part of the winners.
Cool. And I think there's a last question, and I will maybe move that then to our networking. So everyone loved your slides and your presentation, so thank you from online, and asked if you'd be willing to share this after this session.
Sure.
So yes, we are going to share it, the book online as well as the presentation. And to this, is there another one more? Make a last question because we're a little bit behind the schedule. Yes.
Oh, okay. I thought I had two questions. One is take kind of like everything is ecosystems. From your perspective in the Swiss, deep tech, venture machinery, what are the kind of the most broken elements there, right? Not just in terms of funding, but in terms of nurturing everything. Also looking at the types of companies that are kind of at the top, like, would there have been a Google in Switzerland from, having angel investors and everything.
I make it short. I only see the financing part broken, the rest is just world class.
And the second one is, you also mentioned kind of what we have, the hidden champions, the SMEs. What do you see the role of the SMEs in your model as something that Silicon Valley, for instance, does not have?
Yes. SMEs will continue obviously find their way, especially in areas which are not at the attention of the global investors, the niches nobody notices. That model will continue without venture capital. But venture capital is getting pervasive and now addresses a number of niches which before 50 or 30 years ago, the Straumann and Nestle didn't have to compete with. So there is a competition distortion. And I would say all the categories which are filled with venture capital money, then the Swiss KMUs, they will have to, the best companies will have to be VC funded to compete if they want to play the same game.
Cool. Thank you so much, Dominique. For the ones who are online, thank you so much for joining us. Hopefully we'll see you here by November 10 if you can make it. Otherwise we'll stay in touch. For the ones as the audience here, thank you so much. Please help yourself with Gifley and more coffee. for the next networking for 20 minutes. And special thanks to Dominique. Thank you so much for the presentation and all the sharing.
You're welcome.
Thank you.
And please help us a copy of his book.